Light sweet crude long-term forecast for the week of July 16, fxempire.com. As you can see on this chart, the light sweet crude markets did have pretty bullish 5 sessions. It is approaching, the market is, I should say, is approaching the top of the shooting star from the previous week. So we are looking to smash through resistance. And $90 is where we focus our analysis on. If we can get above the $90 mark on a daily chart, we think that this market should run to 100 without too many issues. 95, of course, will cause a little bit of reaction, but 100 would almost have to be stronger resistance. If we can't, we think that a close back below 85 would send this market back down to 78 or so. And that's really how we're playing it. We're more or less waiting to see what happens at 90. Obviously, a breaking at the top of a shooting star is a bullish signal, and that would have us very interested going long. We feel this is more of a trade, although there is a certain amount of an argument to be made for possibly a consolidative area between 80 and 110. There's so much clustering, though, right above 100. It's going to be simpler just to take profits at that point in time. If we can get back below the 78 level after we get back below the 85 to get our sell signal, that indeed would be extremely, extremely bearish. At this point in time, more than likely, any spike that gets to see in 110 will be headline driven, either out of Europe or the Middle East. We really cannot anticipate anything out of Europe really causing it. It would be more of a negative dollar bias, and as the dollar is a currency everybody's running towards, it makes sense that the dollar is being sold off on Friday, as the dollar was just simply overbought, especially against currencies like the euro. It's fallen a bit too far, too fast. So this may or may not be just a technical move at the end of the week. But again, we find that 90 is the level focused. Above it, we go to 100. Below it, we want to see 85 taken out, and then we start selling again.